Part 3. Calculate, look at this, calculate the total cost of the said lawful patent to be capitalized in the statement of financial position of KoiKoi Ltd. as at 31 December 20.11. We know if we need to focus on the patent, again guys, our I is 38 principles. According to the requirements, they indicate this to us, I is 38 intangible assets. Note, show all data input into your financial calculator, show all your calculations, and round all amounts to your nearest rand. As always, please have a plan of action. When you look at the bottom left side of your screen, my plan, I'm going to include my timeline, identify from the information the portion which is my research costs. This I know should be expensed in my profit and loss, and my development costs. This portion is the portion that should be capitalized as per the requirement. Therefore, I need to focus purely on the development cost in terms of my question. Okay. Therefore, if you refer to the scenario, we have read through the scenario, you will remember that they've commenced with research on 1 February. They've completed research and development on, sorry guys, my timeline here is incorrect. This shouldn't be here. They've completed the research phase on 31 March 20.11. Therefore, if we look at this, February, March, my research phase was for a 2-month period. Therefore, if we now refer to, to this scenario, they've indicated to us when the development phase ended, and this was 1 August 20.11. Second paragraph of the internally generated patent, 1 August. Therefore, on my timeline, 1 August 20.11. Therefore, I'm looking at April, May, June, July, a 4-month period. And we need to then determine the amortization for this period of our asset. Right. Okay. Now, if we look at this, we need to determine the amount that should be capitalized. Therefore, do you agree with me that we will capitalize the 4 months in terms of our development cost? Our research costs will be expensed. Okay, now let's refer back to the scenario. First paragraph, they've indicated to us that they commenced with the research and development on 1 February 20.11. Next paragraph, after completion of the research phase on 31 March 20.11, which we were able to identify as 2 months, the project manager and the chief financial officer determined that all the criteria for recognition of an intangible asset was satisfied. Therefore, we now know we are able to recognize our development costs, capitalize this. On 1 August 20.11, the development of the patent was completed and it was available for use as intended by management on this date. Therefore, we know we need to start, or we may start with our depreciation. I just want to include this here, guys, before I forget. August, September, October, November, and December. We are looking at a 5-month period. Right, then the following costs, they provide us with our salaries and our consumables, 700,000 and 100,000. Now, guys, we will have to also divide the consumables, salaries and consumables. Even if you look at this, consumables may be things that they have developed during that time and then sold and so forth, but we also have to divide this between the research and development period. Therefore, on our timeline, at the bottom, we now have our salaries and we have our consumables. Salaries, which is the 700,000. Consumables, which is 100,000. I'm just going to add this, right? 800,000. Divide this by 6 times 2. This is our research. Then the 800,000, divide this by 6 times 4. And this will be our development. Therefore, our research, we will expense 266,667. And our development 533,333, we will capitalize. Right. Okay, next. Remember, they've indicated to us that we have this specialized machine that was purchased for the 2 million, of which 1.1 was paid cash, and we have the 900,000. The 900,000, we've identified that we need to calculate the present value. How do we do this? The amount that will be paid will be the 900,000. Okay, guys, I'm lying to you. When you look at the right side, we will pay this 900,000 at the end. Therefore, we need to determine the present value at the beginning, not as per our reading scenario, just the other way around. Okay, we will have to pay 900,000, but the value on day 1 will not be 900,000. Therefore, we need to take into account the time value of money, right? Now, for us to be able to do this, we know our future value that we will pay at the end of at the end of period 10 will be 900,000. We know our period will be 10 months. Our rate will be pre-tax 15%, but with my shop, if my period is in months, my rate should be in months, and I'm able to determine my present value. Right, 794,863 plus 1.1 million. Therefore, for the time when this machine is used, which is a cost of 1,894,863, the depreciation relating to this machine, therefore minus our residual value, guys, I have explained this in KoiKoi Coffee, divide by 15 years times. Now, important, if you look at this, our acquisition date was 1 February 20.11. If you look at our timeline, this machine was purchased 1 February 2011. Therefore, at the bottom, our machine, it has a value of 1,894. Sorry, I just want to check this. 1,894,863 minus the 300,000 in terms of our residual value. Divide this by 15 years. For the research phase, we calculate the amount times 2/12. For our development phase, it's the depreciation times 4/12. Therefore, when you now look at this, the amount in terms of our research phase to add is 53164, and in terms of our development phase, 106,324. Therefore, we are able to add, let's say this is A and B, therefore A plus B. And this is exactly as per your solution. You look at the top, we have our salaries and consumables. Sorry guys, I want to make use of blue. Our salaries and consumables and our depreciation, and we will have a cost in terms of our development of 639,658. Okay, therefore, in terms of the requirement, remember we had to calculate the total cost, and we have answered this question. The total cost will be 639,658.